Ever feel like the world is just throwing too much information at you
Mm.
and you're constantly trying to keep your head above water?
Mm-hmm.
Like you need some kind of, I don't know, secret decoder ring or maybe even a superpower to really make sense of it all.
Yeah, absolutely. Information overload is real.
Well, today we're diving into the mind of someone who arguably did possess that very superpower. Charles T. Munger.
Ah, yes. Munger?
Warren Buffett, his legendary intellectual partner, famously described Munger as having the best 30-second mind in the world.
Quite a statement.
Yeah, someone capable of cutting through like immense complexity to see the essence of everything before you even finish the sentence.
Mhm.
Just incredible.
He had a unique way of processing things, for sure.
And the incredible promise Munger offered wasn't just about knowing a ton of facts, but about knowing how to think.
Right. That's the key difference.
He believed, quite boldly actually, that even people who aren't geniuses can outthink the rest of mankind if they develop certain thinking habits.
That's such a powerful idea, isn't it? It makes wisdom feel accessible.
Exactly. It's an inspiring claim. And our mission today is to unpack these powerful thinking habits, what he famously called mental models.
Mm-hmm.
Explore how they connect into this like robust framework. And most importantly, understand how you can start building your own internal architecture for navigating life's, well, intricate labyrinth.
That's right. This deep dive is all about Charlie Munger's concept of mental models and his lattice work of worldly wisdom.
Lattice work. I like that term.
Yeah, it's very visual. And it's less about, rote memorization of data points and far more about acquiring a diverse, multidisciplinary array of cognitive tools.
Tools for thinking.
Precisely. Tools to aid in problem solving, enhance decision making, and ultimately just to make more accurate sense of the world around you. We'll show you how Munger deliberately sought out these powerful ideas from, well, a multitude of disciplines.
Not just business or finance.
Yeah.
No.
Absolutely not. Physics, biology, psychology. He read voraciously, and he rigorously practiced their application. And crucially, how this systematic methodology for cultivating wisdom is not some inherent trait, but an entirely attainable skill for anyone willing to put in the intellectual work.
Okay, so get ready to expand your intellectual architecture, because by the end of this deep dive, you'll have a much clearer understanding, hopefully, of how to perceive the world through Munger's unique spectacles.
The intellectual foundation building the mind scaffolding.
All right, let's kick things off with the man himself, Charles T. Munger, longtime vice chairman of Berkshire Hathaway.
Right, Buffett's right-hand man for decades.
Exactly. And he was legendary, not just for his investment acumen alongside Warren Buffett, but really for the truly profound and expansive thinking that underpinned all of his success.
Mm-hmm.
It really wasn't just about making money, was it? It was about how he thought about making money and, frankly, about how he thought about, well, everything else in life.
Indeed. And Warren Buffett's praise of Munger's cognitive ability, it wasn't just flattery, it was genuine admiration.
Yeah.
But Munger himself, he credited his achievements not to innate genius alone, but to a lifelong dedication to continuous learning and the cultivation of certain thinking habits.
There are those thinking habits again.
Exactly. He made it really clear. Even people who aren't geniuses can outthink the rest of mankind if they develop certain thinking habits. So the key then is to uncover what these foundational habits actually were.
And one of those, you mentioned his reading, one absolute foundational habit was just voracious reading.
Oh, completely.
Munger's conviction on this was absolute. In my whole life, I have known no wise people over a broad subject matter area who didn't read all the time. None. Zero. Strong words.
Pretty unequivocal.
Yeah, but it wasn't passive consumption,
Yeah,
right?
yeah.
He wasn't just, like, stumbling upon good ideas. He actively sought them out from incredibly diverse subjects.
Actively hunted them down.
Yeah. And then he rigorously practiced their application in real-world scenarios. It's this deliberate, cultivated process that made all the difference. He wasn't just smart. He was like a disciplined intellectual athlete.
That's a great way to put it. The practice was key.
Okay, so let's unpack this a bit further. When Munger talks about these thinking habits, what exactly is a mental model? How did he define them, and why are they so essential for cutting through all that complexity we talked about?
Well, Munger defined them as frameworks or cognitive tools that help us understand and interpret the world.
Okay. Frameworks or tools.
Yeah, you can literally think of them as specialized spectacles through which we perceive the world, or maybe like an internal Google Maps guiding your journey through life's challenges.
I like that analogy.
And what's fascinating is their primary purpose. It's really to simplify reality. They aid in problem solving, enhance decision-making capabilities, facilitate understanding of complex concepts, and ultimately just to make sense of a pretty chaotic world.
Right.
And Munger's models were decidedly not confined to a single domain. They were, as he put it, analytical rules of thumb pulled from disciplines outside of investing, ranging from physics to evolutionary biology.
And that's a crucial point, isn't it? That these models, by their very nature, they have to be simplifications of reality. They aren't exact replicas.
Oh, no, they can't be.
If a model tried to capture every single nuance of reality, it would be just as complex and, well, unmanageable as reality itself. So their utility truly stems from this simplification.
Exactly. And this inherent simplification also means that mental models have limitations. You have to recognize that.
Okay.
The recognition of this trade-off, that models are indispensable for comprehension yet always incomplete representations, is fundamental.
Right.
And this understanding directly informs Munger's insistence on employing a multitude of models, a concept famously encapsulated by the metaphor, the map is not the territory.
The classic map is not the territory.
Precisely. No single map perfectly represents a complex terrain, right? But a collection of specialized maps viewed together can provide a far richer, more accurate understanding. You wouldn't use a road map for deep-sea navigation, would you?
No, probably not.
You need the right tool, and often you need many tools for the job.
Okay, so here's where it gets really interesting, because Munger's real genius, it seems, wasn't just in collecting these models, but in how he connected them.
Yes, the connection is vital.
The grand overarching philosophy of his approach is the lattice work of mental models. You mentioned that earlier. This isn't just a list, right?
Yeah.
It's about systematically gathering these big ideas from a huge array of disciplines: psychology, economics, physics, biology, engineering, math, history, you name it.
All the big ones?
And weaving them together into a coherent cross-functional framework. Munger famously asserted that all the wisdom in the world is not to be found in one little academic department. So why is this interconnectedness so much more powerful than just having a collection of smart but, isolated ideas?
Well, if we connect this to the bigger picture, Munger believed that a collection of maybe 80 to 90 important models drawn from these varied fields could carry about 90% of the freight in making an individual worldly wise.
80 to 90. That's a manageable number, sort of.
Relatively, yeah. But the real power of the lattice work lies not merely in accumulating disparate models, but precisely in their interaction and interconnection. That's the key. Models from different disciplines can illuminate and reinforce one another, providing a more comprehensive and nuanced understanding than any single model could offer in isolation. For example, understanding a psychological bias like overconfidence might be significantly enhanced by understanding feedback loops from systems theory that explain how this bias can perpetuate itself.
Right.
Or maybe by considering redundancy from engineering as a safeguard against its consequences in decision-making. It's about creating this robust, interwoven fabric of knowledge where each thread supports and strengthens the others.
And this multidisciplinary approach is a direct antidote to what Munger called the man with a hammer syndrome, right?
Exactly.
Where an individual has only one or maybe a few tools from their specialized field and consequently tends to see every problem as a nail.
If all you have is a hammer.
Yeah, everything looks like something that needs pounding. The ultimate goal, as he put it, is to array your experience, both vicarious and direct, on this lattice work of models, which allows for a richer interpretation of new information and ultimately far more robust decision-making.
Precisely. The lattice work of mental models functions as an emergent system.
Emergent system.
Yeah, where the integrated whole is significantly greater than the sum of its individual parts. The real intellectual leverage comes from the connections and interactions between these diverse models. It's about recognizing how different forces combine to produce complex outcomes. For instance, you can't truly understand market bubbles with just economics. You need psychology, systems theory, maybe even history to see the full Lollapalooza effect at play.
We'll definitely get to that Lollapalooza effect later. Sounds intriguing. And crucially, this lattice work, it's not a static achievement, is it? It's an ongoing, dynamic process.
Absolutely. Learning, unlearning, relearning.
Because the world is in constant flux. New knowledge continually emerges. Old ideas might get disproven. So a fixed lattice work would quickly become outdated.
Totally useless, eventually.
Munger's profound emphasis on continuous, lifelong learning and the necessity of constantly challenging and unlearning to renew the lattice work underscores its dynamic nature. This demands significant intellectual humility, doesn't it?
Huge amounts. The willingness to acknowledge the limitations of your current understanding and to update your mental maps as the territory changes. You have to be willing to kill your darlings, intellectually speaking.
Yeah, your darlings. Yeah. Tough, but necessary.
Foundational thinking tools, your essential cognitive toolkit.
Okay, let's dive into some of these specific tools. One of Munger's most celebrated mental models is the principle of inversion, summarized by his mantra, invert, always invert.
Ah, inversion. Classic Munger.
He famously quipped, "All I want to know is where I'm going to die so I won't go there," which is, his darkly humorous take on this powerful idea. How does this seemingly morbid approach become such a powerful tool, not just for avoiding disaster, but, surprisingly, for finding success?
Well, it's really about uncovering hidden vulnerabilities and proactively identifying pitfalls. Our natural tendency is often to chase success directly, right?
Yeah, focus on the goal.
But inversion forces us to consider the opposite. What actions would guarantee failure? Or what would lead to the precise outcome you wish to avoid? This isn't just a clever trick, it's a fundamental shift in perspective. Munger himself stated, "I sought good judgment mostly by collecting instances of bad judgment, then pondering ways to avoid such outcomes."
So you learn from failure, ideally other people's failures.
Exactly. By systematically avoiding catastrophic errors, you significantly stack the odds in your favor, which, over time, often looks a lot like success.
So rather than just focusing on those direct paths to success, inversion forces this deliberate consideration of potential pitfalls, the failure modes, the negative outcomes that might otherwise be overlooked because of, common human tendencies like optimism bias.
Oh, absolutely. Optimism bias is a killer.
In investing, for instance, it underpins Warren Buffett's famous rules. Rule number 1, never lose money. Rule number 2, never forget rule number 1.
Can't get much clearer than that.
By rigorously focusing on what not to do, you're far more likely to achieve long-term success and resilience.
Absolutely. When evaluating a business, inversion might lead an investor to ask, okay, what could utterly destroy this company in the next decade? Or what are all the ways this investment could go terribly wrong?
Right. Stress testing the idea.
Exactly. This helps identify critical, often overlooked risks and assess resilience. Munger even used this as an Air Force weatherman, asking himself, what could I do to kill these pilots? Not because he wanted to, obviously, but to meticulously avoid those actions.
Wow, that's intense.
It is. And Jeff Bezos reportedly used inversion when deciding to start Amazon, focusing on minimizing future regret rather than maximizing immediate gains. It leads to more robust, well-considered strategies. Thinking about what you'll regret not doing can be as powerful as thinking about what you want to achieve.
Minimizing future regret. That's a powerful frame. Okay, moving on. Another cornerstone of Munger's and Buffett's philosophy is the circle of competence.
Ah, yes. Crucial.
This mental model dictates that you should only operate, particularly in making investments or significant decisions, within areas where you possess deep, genuine understanding and expertise. Munger often emphasized, knowing what you don't know is more useful than being brilliant.
So true. It's about intellectual honesty.
It really is about an honest self-assessment of your intellectual boundaries, isn't it?
It is. And the critical insight here is not necessarily the size of your circle, but rather knowing its boundaries with absolute clarity and honesty.
Okay, so it's not about being an expert in everything.
Not at all. For example, Munger and Buffett consistently avoided investments in many technology companies for years. Not because they doubted their potential, but because they genuinely felt these businesses fell outside their circle of deep understanding. They couldn't predict the winners or losers reliably.
Right. They stuck to what they knew.
Conversely, their massively successful investments in companies like See's Candies or Costco were rooted in their thorough grasp of those specific sectors. They understood the competitive dynamics, the customer behavior, the underlying economics inside and out. It was within their circle.
So the circle of competence is as much about intellectual humility and acute self-awareness as it is about possessing expertise.
Precisely. It acts as a crucial defense against things like the Dunning-Kruger effect.
Where you think you know more than you do.
Exactly. And the perils of overconfidence bias. Munger's caution, it's great to have a manager with a 160 IQ unless he thinks it's 180, perfectly encapsulates this danger of inflated self-perception.
Yeah, that's a good one.
It truly is. The model demands an honest appraisal of your true understanding, a metacognitive skill involving accurately assessing your knowledge boundaries.
And metacognition.
Yeah.
Thinking about thinking.
Right. And while Munger encouraged continuous learning to gradually and prudently expand your circle over time, he equally stressed the absolute discipline of staying within its current confines when making high-stakes decisions. It's about disciplined focus, ensuring you play to your strengths and only expand where you've genuinely built knowledge. Don't stray outside the lines when the stakes are high.
Got it. Okay, next up. Effective decision-making, in Munger's view, requires looking beyond the immediate and obvious. This is the essence of second-order thinking.
Thinking deeper.
A mental model that compels you to consider the subsequent, indirect, and often longer-term consequences of any action or decision. It involves repeatedly asking the question, and then what? So, how do we begin to train ourselves to think that many layers deep past just the quickest, easiest answer?
Well, it pushes you past superficial analysis by forcing you to consider the chain of repercussions that ripple through a system over time.
Ripple effects.
Exactly. While first-order thinking is superficial, focusing only on direct effects, I do X, Y happens, second-order thinking delves into those deeper implications. Okay, Y happens, and then what? What happens because of Y?
Right.
This concept, prevalent in systems thinking and strategic analysis, was vital to Munger's evaluation of investments and business strategies. It serves as a critical antidote to short-termism and the human tendency to be swayed by immediate gratification or pain, which frequently lead to suboptimal long-term outcomes.
It's like a chess.
Very much like chess. A chess master doesn't just consider the immediate impact of a move, but how it will shape the board several turns ahead. They see the evolving strategic landscape. They're thinking about the second, third, fourth-order consequences.
Well, it's not just about foresight, but about anticipating the systemic ripple effects. For example, a first-order thinker might see a company with rising earnings and just decide to buy the stock. Quick decision.
Right. Looks good on the surface.
But a second-order thinker, applying this model, would go further, wouldn't they?
Exactly. That second-order thinker might consider, okay, those rising earnings are attracting new competition, which will eventually erode profit margins. Or maybe that growth is fueled by an unsustainable trend. That analysis leads to a very different conclusion, potentially avoiding a bad investment.
Makes sense.
Similarly, think about exercise. The immediate first-order consequences might be discomfort and, time commitment.
Yeah, the pain.
But the second-order effects include improved health, more energy, better appearance over time. By forcing a longer time horizon and a more systemic view, second-order thinking is essential for achieving sustainable success and avoiding detrimental, unintended consequences. It aligns perfectly with Munger's emphasis on patience and a long-term perspective.
Okay, another fundamental concept, this one from economics, is opportunity cost. Munger considered this a superpower for making sound decisions.
A superpower, yes. He rated it very highly.
It posits that the true cost of any choice is not merely its explicit price or effort, but the value of the next best alternative that must be foregone. Every decision you make carries with it the unseen cost of what you didn't choose.
That's the core of it. Munger stressed that in investing in capital allocation, the highest and best use is always measured by the next best use, opportunity cost.
Always comparing.
Constantly. This model compels a constant comparative analysis. When considering an investment, Munger and Buffett would evaluate its potential return against other available opportunities. If an investment offered a lower prospective return than a readily available alternative, maybe just holding cash or buying treasuries, it would likely be rejected.
Right.
They were constantly weighing options to ensure optimal capital deployment, always asking, is this the absolute best use of our capital right now?
And this applies so broadly to your own life too, doesn't it? The decision to spend, say, $100,000 on a fancy car means foregoing the potential future value of that $100,000 if it were invested and allowed to compound for decades.
Absolutely. That's a huge opportunity cost.
Similarly, a business owner deciding whether to reinvest profits back into the company or pay them out as dividends is making an opportunity cost calculation.
Constantly.
Steve Jobs, for instance, famously applied this principle when he drastically cut Apple's sprawling product line down to just a few key products.
Like the iMac, then later the iPod, iPhone.
Exactly. He recognized that resources spent on mediocre products were unavailable for potential blockbusters. That was a massive opportunity cost calculation.
It really was. And consistently applying opportunity cost thinking requires a disciplined, comparative mindset that actively combats the action bias.
The need to just do something.
Yeah, that human tendency to want to do something without rigorously evaluating whether that action is the best use of resources compared to alternatives. It encourages patience while evaluating options, followed by decisiveness when a genuinely superior opportunity is identified.
Patience and decisiveness again.
Key Munger tenets. It also reinforces the wisdom of avoiding unnecessary activity. Never take action for its own sake. Sometimes the best action is no action if the opportunity cost of acting is too high.
Okay, final one for this section. The margin of safety. Popularized in investing by Benjamin Graham, also a fundamental concept in engineering, integral to Munger's risk management.
Absolutely fundamental, bedrock principle.
It demands ensuring a significant buffer, right, between the estimated intrinsic value of an asset and its purchase price, or, in engineering, between the design capacity of a structure and the maximum load it's expected to bear. So how does this critical buffer protect us against the inherent uncertainties of the future?
Well, this buffer is intended to protect against errors in judgment, unforeseen negative developments, or just sheer bad luck.
Things you can't predict.
Exactly. Including those highly improbable events often called black swans. Munger explained that the concept really just boils down to getting more value than you're paying.
Simple but profound.
It is. Now, while Graham often sought this by buying mediocre businesses at exceptionally low cigar butt prices.
Getting that last puff of value.
Yeah. Munger influenced Buffett to evolve this thinking towards acquiring exceptional businesses at fair prices. In this refined view, the margin of safety could also reside in the quality, durability, and competitive advantages, the moat of the business itself.
So the safety margin isn't just price, it's also quality.
Exactly. That quality provides resilience against adversity. It's about building robustness into your decisions, ensuring you don't cut things too close.
So for high-quality growth businesses, Munger might view the margin of safety not just as a discount to current intrinsic value, but more as a buffer for potential errors in projecting future cash flows.
Precisely, because projecting the future is inherently difficult. The engineering example often cited is building a bridge designed to support 20-ton trucks if it's only expected to regularly carry 10-ton trucks.
Right, you build in that extra capacity.
You're essentially designing for a worst-case scenario, providing ample protection.
And the consistent application of margin of safety is an explicit acknowledgement of what you called epistemic humility.
Yes, epistemic humility. A recognition of the inherent limits of one's predictive abilities and the pervasive uncertainty of the future.
Knowing you don't know everything.
Basically. By demanding this buffer, an investor or engineer concedes that forecasts can be wrong, unexpected events will occur, and that they themselves are fallible. We all make mistakes. The margin of safety is thus a practical, robust strategy for building resilience against these irreducible uncertainties and your own potential for miscalculation. It ensures that even if things don't go as planned, the consequences are less likely to be catastrophic. It's a bedrock principle for managing risk effectively across any domain.
Understanding human nature, the psychology of human misjudgment.
Okay, now let's shift gears a bit. A huge portion of Munger's intellectual framework was dedicated to understanding the quirks and flaws of human cognition, psychology.
Ungodly important, as he put it.
Yeah, he believed that a grasp of basic psychology, particularly the common ways in which human judgment messes up, was ungodly important. He knew that mastering yourself and understanding others was often the first step to mastering the world around you.
Absolutely. Munger meticulously compiled and elaborated upon a list of about 25 standard causes of human misjudgment.
25? Wow.
Yeah, it's quite a list. He argued that the human brain, in its quest for efficiency, often relies on shortcuts or heuristics.
Mental shortcuts.
Right, which, while useful in many situations, can systematically lead to miscalculations, biases, and irrational decisions, especially in complex domains like investing. His approach involved what he called a two-track analysis.
Two tracks.
Yeah. First, considering the rational factors based on objective reality. Second, evaluating the potential subconscious psychological influences at play on yourself and on others involved.
Okay, so the rational track and the psychological track.
Exactly. And just briefly, some of these cognitive traps include the reward and punishment superresponse, how powerfully incentives shape behavior, sometimes in bad ways.
We talked about incentive bias earlier.
Right. Then there's the liking-loving tendency, ignoring flaws in those we favor, like a charismatic CEO pitching a shaky investment. And it's inverse, the disliking-hating tendency, dismissing virtues of those we dislike, maybe ignoring a competitor's strengths because you just don't like them.
Okay.
Others are more insidious, like the doubt avoidance tendency, rushing decisions just to escape the discomfort of uncertainty.
Oh, I feel that one sometimes.
We all do. And the inconsistency avoidance tendency, Our reluctance to change established beliefs or habits, even when evidence says we should, like holding onto a losing stock just to avoid admitting you made a mistake.
Stubbornness, basically.
Often, yes. It's hard to change your mind.
In this collection of psychological insights, it isn't merely an academic exercise, is it? It serves as a profoundly practical toolkit.
Absolutely practical. For self-correction primarily, and for understanding the often irrational behavior of others, especially in markets driven by collective sentiment like fear and greed.
Right.
And he didn't just catalog these biases, he emphasized their antidotes and the importance of actively working to counteract their influence. It's about being proactive against your own cognitive blind spots. You have to build systems to counter them.
Let's go deeper into some particularly impactful biases that, in our modern information-rich world are maybe more relevant than ever for you, the listener, to recognize. First up, confirmation bias.
Ah, the big one.
This is that pervasive tendency to seek out, interpret, favor, and recall information that confirms your pre-existing beliefs while giving disproportionately less consideration to contradictory evidence. How does Munger teach us to fight this powerful internal drive?
Well, Munger consistently emphasized actively fighting confirmation bias by deliberately seeking out disconfirming evidence.
Looking for reasons you might be wrong.
Exactly. He cited Charles Darwin's practice of meticulously noting any observation that seemed to contradict his theories as a powerful antidote. Darwin understood that your favorite idea is often the one you need to test the hardest, to try and break it.
That takes real discipline.
Immense intellectual honesty. In investing, confirmation bias can be ruinous, leading an investor to cling to a failing stock by focusing only on news that supports their initial thesis while ignoring mounting negative evidence. You have to actively look for the bear case.
Okay. And closely related and incredibly potent is incentive-caused bias. Munger considered incentives to be superpowers in shaping human behavior.
Superpowers, absolutely.
This bias describes how self-interest, particularly financial incentives, can powerfully and often unconsciously warp judgment and lead to actions or advice that benefit the individual providing it, sometimes at the expense of others or objective truth.
The classic adage, never ask your barber if you need a haircut, illustrates this perfectly.
Right. Your barber always thinks you need a haircut.
Usually. Munger pointed to the Wells Fargo scandal, where employees created millions of unauthorized customer accounts due to intense pressure from aggressive sales quotas, as a stark example of incentive-caused bias run amok.
Yeah, that was bad.
Conversely, well-designed incentives, like FedEx shifting from hourly pay to paying workers per shift to improve efficiency and speed, can produce remarkable positive outcomes. It's about aligning self-interest with desired outcomes, recognizing that incentives drive practically all human behavior. Show me the incentive, and I will show you the outcome, Munger said.
Wow. Okay, then there's the social proof tendency. Humans are inherently social creatures, right?
Uniquely social.
And this tendency describes our inclination to look to others for cues on how to think and act, especially in situations of uncertainty, ambiguity, or stress. This herd mentality can lead to widespread conformity, even if the crowd's behavior is totally irrational.
We see this play out constantly in markets. Market bubbles and subsequent crashes are often fueled by social proof. Rising prices and enthusiastic participation by others create this compelling narrative that draws in more investors, regardless of the underlying fundamentals. FOMO, fear of missing out, is largely driven by social proof.
Right. Everyone else is doing it, so it must be right.
Exactly. Munger advised learning to think independently and consciously ignoring the wrong examples set by the crowd. He famously said, "You're better off if you have a lot of people telling you you're nuts, if you're right." It takes courage to stand apart.
Definitely. Okay, let's touch on authority misinfluence tendency.
Ah, yes, deferring to the experts.
People have this natural inclination to defer to and obey individuals perceived as authority figures, sometimes even when the directives are questionable or harmful.
The Milgram shock experiments are the classic, chilling demonstration of this powerful tendency. People administered what they thought were dangerous shocks just because an authority figure in a lab coat told them to.
Scary stuff.
It is. In business and investing, this can manifest as blindly following the pronouncements of high-profile CEOs, acclaimed analysts, or market gurus without critical evaluation.
Yeah.
Munger cautioned against unthinking deference to authority and advised being wary when appointing individuals to positions of significant power. Always question authority respectfully, but question it.
And what about doubt avoidance and inconsistency avoidance tendencies? These sound related.
They are. The human mind generally finds doubt and uncertainty really uncomfortable.
Yeah, it's stressful.
So the doubt avoidance tendency leads individuals to make decisions quickly, sometimes prematurely, just to alleviate the psychological discomfort of ambiguity. Get it over with.
Right, make the pain stop.
And inconsistency avoidance refers to our strong reluctance to change our established habits, beliefs, or commitments, even when new evidence suggests a change is warranted. It's often easier to prevent a bad habit than to change an existing one. We hate admitting we were wrong or changing course.
That makes sense. Benjamin Franklin famously exploited this, didn't he? By asking a critic to do him a small favor.
That's right. Fulfilling the favor made the critic view Franklin more favorably, because disliking someone you've just helped creates cognitive dissonance. You have to adjust your view to maintain consistency. Clever psychology.
Very clever. Finally, let's look at loss aversion, which Munger termed deprival superreaction tendency.
Deprival superreaction.
Yeah. This tendency describes how humans react with disproportionate intensity to the loss, or threatened loss, of something they value, be it property, status, or even just an idea compared to the pleasure derived from an equivalent gain.
The pain of a loss is often felt much more keenly, maybe twice as keenly, as the joy of a similar-sized gain. Daniel Kahneman and Amos Tversky did groundbreaking work on this.
Right, prospect theory.
Exactly. And this psychological asymmetry can lead to incredibly irrational behaviors like gamblers chasing losses, trying desperately to get back to even.
Doubling down when they shouldn't.
Precisely. Or investors holding on to losing stocks for way too long in the hope of breaking even, rather than cutting their losses rationally based on the company's prospects. It prevents us from making objective decisions when faced with potential or actual loss. Munger understood that acknowledging this bias is the first step towards counteracting its powerful sway over our decision-making. You have to recognize it's happening.
Okay, so we have all these individual biases. But here's where it gets really interesting. You hinted at this earlier, the Lollapalooza effect.
Ah, the Lollapalooza, Munger's term.
His term for a super tendency, or a powerful outcome that occurs when multiple psychological biases, or maybe a combination of psychological factors and other situational influences, act in confluence, reinforcing each other.
Piling on top of each other.
Yeah, to produce extreme, often nonlinear results. In such situations, the combined impact is significantly greater than the sum of the individual effects. Munger sometimes used the shorthand 2 + 2 = 5 to illustrate this synergistic amplification.
Exactly. It's not just additive, it's multiplicative sometimes.
It's not just a simple addition of biases, it's a compounding of irrationality, sometimes explosively so.
Munger used the Lollapalooza effect to explain a wide range of phenomena, market manias and panics, cult indoctrination, other instances of extreme human behavior. For example, that GameStop stock frenzy back in 2021.
Oh yeah, that was wild.
Classic Lollapalooza, arguably. Multiple behavioral triggers firing simultaneously. Social proof from online communities like Reddit, authority bias maybe from key influencers, massive fear of missing out, FOMO, perceived scarcity, maybe incentive-caused bias from gamified trading apps, commitment bias once people were in.
We're all hitting it once.
All hitting at once, creating this feedback loop. Understanding this model helps in identifying and potentially mitigating the combined influence of various psychological factors that can lead to irrational exuberance or unwarranted despair.
And it demonstrates the immense power that such a confluence of biases can wield for good or ill. Munger also cited positive examples, didn't he?
He did. He pointed to the success of Alcoholics Anonymous, which he believed achieves a relatively high success rate by skillfully combining multiple psychological principles acting in concert. Like social proof within the group, commitment techniques, publicly stating your intention, maybe leveraging the pain of hitting rock bottom as a motivator, deprival superreaction.
Okay.
Conversely, he used cults as an example of negative Lollapaloozas, where factors like social isolation, induced tribalism, intense social proof, maybe authority misinfluence from the leader, all converge to produce extreme belief and behavior.
So the Lollapalooza effect really underscores the importance of systems thinking within psychology itself.
Absolutely. Outcomes in complex human systems are often not attributable to a single, isolated cause, but rather to the dynamic interaction of multiple variables. Recognizing a Lollapalooza in progress requires identifying the various contributing psychological levers and understanding how they might be amplifying each other. This is a higher-order analytical skill than simply spotting an individual bias,
Yeah, it's seeing the whole picture.
Exactly. And it makes the Lollapalooza concept a potent explanatory tool for events that might otherwise seem bafflingly irrational or just disproportionately extreme.
Models from diverse disciplines, broadening your perspective.
Okay, now let's broaden our perspective again and look at how Munger pulled profound insights from other disciplines beyond psychology. First up, mathematics and the principle of compound interest.
Ah, the eighth wonder of the world.
Exactly, where returns are earned not only on the initial principal, but also on the accumulated interest, leading to that exponential growth over long periods. This was a cornerstone of Munger's investment philosophy. Albert Einstein reportedly called it the eighth wonder of the world, and Munger certainly viewed its power with similar reverence. His advice was simple: never interrupt it unnecessarily.
Let it run. And what's fascinating here is that the power of compound interest, it really extends beyond the purely financial realm, doesn't it?
How so?
Well, it serves as a potent metaphor for the accumulation of knowledge, reputation, skills over time. Munger's unwavering emphasis on lifelong learning, remember?
Right. Read all the time.
And his aspiration to build a seamless web of deserved trust. That suggests that the benefits in these non-financial domains also compound. Small, consistent efforts of acquiring knowledge or behaving ethically, they accumulate to create substantial advantages and opportunities over the long run, much like financial capital grows through compounding. Your reputation compounds. Your knowledge base compounds.
That's a great insight. Compounding knowledge. Okay. Still in math, navigating a world rife with uncertainty requires tools to think systematically about potential outcomes. Munger used principles of probability and the framework of decision trees.
Yes, thinking probabilistically. Crucial.
This involves visualizing various possible future states, assigning probabilities even if they're subjective and approximate to each, and then assessing the potential risks and rewards associated with different courses of action.
He believed that a basic understanding of the mathematics of permutations and combinations, which underpin probability, was essential. He felt that not grasping these concepts puts you at a huge disadvantage.
Okay.
And Warren Buffett, his partner, is noted for automatically thinking in terms of decision trees when analyzing situations, sort of mapping out the possibilities. A key tenet of their approach was to understand the odds and then to allocate heavily only when those odds were significantly in their favor.
Waiting for that fat pick.
Exactly. Don't swing at everything. Wait for the high probability setup.
But while the mechanics of constructing a decision tree might be relatively straightforward, its effective use hinges on more than just mathematical skill, right? The critical challenge lies in accurately populating the tree.
Absolutely. Defining the relevant variables, the potential outcomes, and assigning meaningful probabilities to them. That's the hard part.
This is where qualitative judgment, informed by the broader lattice work, becomes paramount, isn't it? It's not just crunching numbers.
Exactly. This often involves a degree of subjective judgment, which must be informed by other mental models. For instance, accurately assessing the probabilities related to a business venture requires a deep understanding of that business and its industry, circle of competence, and a conscious effort to counteract cognitive biases like over-optimism or availability bias, psychology, that might skew those probability estimates. So this quantitative mathematical model is deeply intertwined with and reliant upon qualitative judgment and the broader lattice work. You also need to understand that mathematical concepts like random walks might describe short-term price fluctuations, but the larger, more meaningful market swings often have these deeper interacting causes involving psychology and feedback loops.
Okay, moving to systems thinking, biology, physics. Another powerful idea Munger borrowed was the concept of feedback loops.
Yes, feedback loops are everywhere.
A feedback loop occurs when the output of a system is fed back into the system as an input, creating this continuous cycle that influences the system's subsequent behavior.
Right. And these loops can be positive, meaning they amplify the system's output, potentially leading to exponential growth or runaway effects.
Like a snowball rolling downhill.
Exactly. Or they can be negative, which tend to stabilize the system, dampen change, and maintain equilibrium, like a thermostat. Munger applied this model to explain how specific actions can lead to unintended or escalating consequences in business and investing. For example, a positive feedback loop is clearly visible in a stock market bubble. Rising prices attract more investors whose buying activity further fuels price increases, creating this self-reinforcing cycle upwards.
And it will pop.
Until it pops. Conversely, a sharp market decline can trigger fear, leading to more selling, which depresses prices further. Another positive feedback loop, but in a negative downward direction, A vicious cycle.
And negative feedback loops act as corrective mechanisms.
Generally, yes. For instance, if a stock becomes too expensive relative to its underlying value, buying interest may wane, selling pressure might increase, tending to bring the price back towards a more rational level. That's a stabilizing negative feedback loop. Or think about network effects, where the value of a product or service increases as more people use it, like eBay or Facebook in the early days.
Right, more users make it more valuable.
That's a powerful business example of a positive feedback loop driving growth. And as I mentioned, a simple thermostat regulating room temperature is a classic example of a negative feedback loop. It senses the temperature is too high, shuts off the heat, senses it's too low, turns it on, keeping things stable.
So understanding feedback loops allows you to see businesses, markets, other complex systems, not as static things, but as dynamic, evolving organisms.
Precisely. This is crucial for anticipating non-obvious trajectories and those runaway effects, whether positive like the compounding success of a company with strong network effects, or negative like a speculative bubble destined to burst. Recognizing which feedback loops are dominant in a given system and how they interact helps in predicting its behavior over time, moving beyond simplistic linear extrapolation. Thinking linearly is often wrong in complex systems.
Okay, let's bring in engineering, the principle of redundancy, or having backup systems. Munger considered this a very powerful idea.
Redundancy, yes, building in buffers, related to margin of safety.
It involved duplicating critical components, functions, or pathways within a system so that if one part fails, alternatives are available to prevent catastrophic failure of the entire system.
Munger advocated for structuring both personal and business affairs in such a way that they could withstand extreme, unexpected events or even periods of mismanagement. You see examples everywhere in engineering. A bridge built to withstand loads far exceeding daily expectations, critical aircraft systems having multiple backups, cars carrying spare tires.
Right, the spare tire is a simple redundancy.
It is. In the financial realm, Berkshire Hathaway's practice of maintaining a substantial cash reserve can be seen as a form of redundancy. It provides a buffer against market downturns and also the capacity to seize opportunities when others are forced to sell.
So, while redundancy clearly enhances robustness and resilience, it's not without potential downsides, is it? Can it get too complex?
It can. Adding redundant components can increase the complexity of a system, which, paradoxically, can sometimes introduce new, unforeseen failure modes or make the system harder to manage or understand. There was a near meltdown of the Fermi nuclear reactor back in 1966, reportedly caused by a safety device itself, a form of redundancy breaking off and blocking coolant flow.
Wow, so the safety feature caused the problem.
In that case, allegedly yes. Furthermore, the presence of extensive backup systems can sometimes lead to complacency or increased risk-taking, a phenomenon related to the Peltzman effect.
How does that work?
Well, if individuals or organizations feel overly secure because of the backups, they might behave less cautiously, effectively canceling out the safety benefit. So, applying the redundancy model effectively isn't as simple as more is always better. It requires careful analysis of the specific system, its critical vulnerabilities, and the trade-offs between the benefits of increased resilience and the potential costs or risks associated with added complexity or those behavioral changes.
Makes sense. Okay, back to economics with the Pareto principle, the 80-20 rule.
The 80-20 rule. Very useful heuristic.
It posits that for many events, roughly 80% of the effects come from 20% of the causes. Originated with Vilfredo Pareto's observation about land ownership in Italy.
That's right. And it has since been found to apply broadly across various fields: business, economics, quality control, time management, you name it. Munger utilized this model to identify and concentrate on the critical few inputs, tasks, or factors that yield the most significant impact.
Focusing effort where it matters most.
Exactly. Maximizing productivity, effectiveness, and the allocation of scarce resources like time and capital.
Common examples include the observation that maybe 80% of the company's profits often come from 20% of its customers.
Or 80% of software bugs come from 20% of the code.
Right. Or that 80% of a project's progress can be attributed to 20% of the total tasks. In personal productivity, you might find that 20% of your activities generate 80% of your desired results.
Which leads to the powerful question: what's the one thing I can do today, that vital few, that will make everything else easier or unnecessary? Focus on the high leverage 20%.
So the Pareto principle is more than just a statistical observation. It's really a powerful call for strategic focus and ruthless prioritization.
Ruthless is a good word for it sometimes. It directly challenges the notion that all efforts, inputs, or opportunities are equally valuable. They're usually not. Applying it effectively means actively identifying that vital 20%, the high-leverage activities or factors, and potentially disinvesting time, energy, and capital from the less productive 80%.
Saying no to the trivial many.
Precisely. This requires analytical rigor to discern the truly critical elements from the trivial many, and the discipline to say no to distractions and lower-value pursuits. It aligns perfectly with Munger's emphasis on focused effort and decisiveness.
Let's talk about Bayesian updating, or revising opinions based on new evidence. While Munger didn't frequently use the explicit term Bayesian updating, his whole approach seems deeply aligned with its core tenets, doesn't it?
Strongly aligned, yes. Bayesian reasoning is essentially the process of incrementally updating your beliefs, or the probability you assign to a hypothesis, as new, credible evidence becomes available. It's a formalization of learning from experience.
And Munger's profound emphasis on objectivity, his willingness to change his mind, to destroy cherished ideas, as he put it,
To kill his darlings.
and to constantly learn from new evidence, these are all hallmarks of a Bayesian approach to knowledge and decision-making, right?
Absolutely. He often cited Charles Darwin's habit of intensively considering any evidence that disconfirmed his hypotheses as a crucial method for avoiding first conclusion bias, a practice that is deeply Bayesian in spirit. Munger himself demonstrated this by significantly revising his famous Psychology of Human Misjudgment talk years after its initial delivery to incorporate his evolved understanding. He updated his own beliefs.
And this contrasts sharply with common human tendencies like inconsistency avoidance
Where we hate to change our minds.
and confirmation bias, where we actively seek out evidence that supports our existing beliefs while ignoring contrary data.
Exactly. Munger's approach to revising opinions, actively seeking disconfirming evidence, and being prepared to destroy one's own most beloved ideas if the evidence warrants, is a practical and disciplined embodiment of scientific skepticism and intellectual honesty. This commitment to truth over ego is crucial for avoiding the intellectual stasis that can result from these powerful cognitive biases. It mirrors the scientific method of hypothesis testing, refinement, and, if necessary, rejection. It's the bedrock of rational learning and accurate judgment.
Okay, drawing from biology again, Munger frequently used the modern Darwinian synthesis model to understand the dynamics of business and markets,
Yes, business as an ecosystem.
applying principles of evolution, natural selection, competition, survival of the fittest, and adaptation to analyze why some businesses thrive and endure while others falter and disappear.
He recognized that in the economic ecosystem, just like in nature, some entities succeed by outcompeting others, while others might thrive through forms of, say, out-cooperation or finding unique niches. His application of this model focused on assessing the staying quality of a business, primarily in terms of its durable competitive advantages, its moat,
The moat.
and its capacity to adapt to the relentless competitive destruction forces that characterize most industries. Think Schumpeter's creative destruction.
And Munger's reading list, including influential works like Jared Diamond's Guns, Germs, and Steel, or Richard Dawkins' The Selfish Gene, reflects his deep interest in understanding these long-term evolutionary patterns, doesn't it?
It certainly does. He drew analogies constantly. The cautionary tale of the buggy whip factory, rendered obsolete by the advent of the automobile, serves as a classic example of failure to adapt to a changing environment, a core Darwinian theme in business. Adapt or die.
So it's not enough for a business to be good today. It has to continuously evolve and adapt, just like a species in the wild.
Absolutely. The Darwinian model powerfully implies that in the business world, stasis is often a precursor to extinction. Continuous adaptation, innovation, and the diligent widening and deepening of a company's moat are not merely desirable, but necessary for long-term survival and prosperity in a constantly evolving competitive environment.
Always evolving.
Just as species must adapt to changing environmental pressures to avoid being selected out, businesses face ongoing threats from new competitors, disruptive technologies, shifting consumer preferences, regulatory changes. This model reinforces Munger's long-term investment perspective and his unwavering focus on identifying and investing in businesses with truly durable, adaptable, competitive advantages.
Finally, drawing from the physical sciences, Munger incorporated models like autocatalysis, breakpoints, and tipping points to understand nonlinear dynamics in business. What exactly do these terms mean, and how did Munger apply them?
Okay, so autocatalysis refers to a process that, once initiated, generates products or conditions that further accelerate the process itself. It becomes self-reinforcing. Think of it like a positive feedback loop on steroids, really taking off.
Okay, self-reinforcing.
Breakpoints or tipping points describe situations where a system can absorb changes up to a certain threshold, but beyond that point, a small additional change can trigger a large, disproportionate, and often sudden shift in the system's state or behavior. Think of the straw that breaks the camel's back.
Right, things change suddenly.
Munger applied these concepts to understand how some businesses or trends can achieve explosive, nonlinear growth once they reach a certain critical mass or cross a significant tipping point.
He famously cited Disney as an amazing example of autocatalysis, didn't he?
Yes, where the core creative assets and brand power could generate ever-expanding revenue streams across theme parks, movies, merchandise, television. Each success reinforcing others, carrying the business forward almost on its own momentum. One-hit movie fuels theme park rides, merchandise, sequels.
A virtuous cycle.
Exactly. Similarly, Costco's business model, which relentlessly maximizes a few key variables like low prices via high volume and membership fees, can be seen as creating an autocatalytic system of customer loyalty and purchasing power. Munger noted that you get this marvelous boost in what you're trying to do that runs on and on. You accomplish A, and all of a sudden you're getting A plus B plus C for a while.
The exponential kick.
Precisely. These models from physics and chemistry highlight a crucial insight. Cause and effect in business and economic systems are often not linear or proportional. Traditional analysis can sometimes fall into the trap of assuming linear relationships and simple extrapolations.
Just drawing a straight line forward.
Right. But autocatalysis and tipping points introduce the concepts of exponential change, phase transitions, threshold effects. A business might struggle for years with little progress, then hit a tipping point, maybe due to network effects reaching critical mass, a key technological breakthrough, or a shift in consumer behavior and experience sudden, rapid growth. Conversely, a seemingly stable business might cross a negative tipping point and decline precipitously. Recognizing these nonlinear patterns allows for a more nuanced and potentially more accurate understanding of business trajectories than simple linear thinking can provide. It's invaluable for identifying opportunities for outsized returns or avoiding sudden, unexpected collapses.
Cultivating worldly wisdom, the Munger method in action.
Okay, let's talk about putting this all into practice. A deeply pragmatic principle Munger championed was the immense value of learning vicariously from the mistakes of others.
Oh, hugely important and efficient.
He believed you could gain invaluable insights and avoid costly pitfalls by carefully studying the errors, missteps, and failures of individuals and organizations without having to personally endure the negative consequences. Munger described himself as an avid collector of instances of bad judgment, scrutinizing failures across diverse fields to understand their root causes.
He and Buffett were known for their relentless reading and continuous learning, remember? And a significant part of that was dedicated to absorbing the lessons embedded in others' misfortunes. Business biographies, histories of failures.
Learning from train wrecks.
Essentially, yes.
Yeah.
After experiencing a significant investment loss early in his own career, Munger reevaluated his approach. And that instance of learning from his own mistake undoubtedly reinforced his appreciation for learning from all mistakes, especially those made by others. Why make the same dumb mistake someone else already made and wrote about?
Yeah, exactly. And learning from others' mistakes is such a highly efficient method for expanding your lattice work of experience and refining judgment. Direct personal experience is undeniably a powerful teacher, but some lessons are prohibitively expensive.
Or even ruinous.
To learn firsthand, particularly in fields like investing, where errors can have severe financial consequences. You can't afford to make every mistake yourself.
Absolutely not. By systematically studying the failures of others, you can acquire this vast repository of negative knowledge, a clear understanding of what not to do. This vicarious learning accelerates the acquisition of wisdom far more safely and broadly than relying on personal trial and error alone. It helps build a more robust circle of competence by populating it not just with successes to emulate, but critically with failures to avoid.
Okay, underpinning Munger's entire intellectual and operational framework were several foundational virtues that seem equally crucial for your own success: preparation, patience, discipline, and decisiveness. How did these virtues together form an integrated system for Munger?
They absolutely form a synergistic and sequential loop. They build on each other.
Okay.
First, preparation. This involves that thorough research, continuous learning, the daily commitment to becoming a little wiser. Munger famously stated, "The only way to win is to work, 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 and hope to have a few insights." This hard work of learning and thinking is the bedrock upon which sound judgment is built.
Got it. Foundational.
Then, patience. This means waiting calmly and rationally for the truly outstanding opportunities, the fat pitch in baseball parlance, rather than swinging at every mediocre chance that comes along just because you feel you need to be doing something. Munger understood that progress, especially in investing, is often not linear and that great opportunities are rare. You have to wait for them.
Resisting the action bias again.
Exactly.
Mm.
Next, discipline. This entails strict adherence to one's core principles, like operating within your circle of competence, demanding a margin of safety. It means avoiding folly, maintaining emotional control, especially during periods of market stress or euphoria when everyone else is losing their heads.
Staying rational when others aren't.
That's the goal. And finally, decisiveness. Once thorough preparation has identified a high-probability opportunity where the odds are heavily in your favor, Munger advocated for acting boldly and allocating capital significantly. Good ideas are rare when the odds are greatly in your favor. Bet. Allocate heavily. Don't just nibble.
So rigorous preparation enables the accurate recognition of those rare, high-quality opportunities. Patience allows you to wait for these specific conditions to materialize. Discipline ensures adherence to sound criteria and emotional equanimity. And finally, decisiveness empowers you to capitalize effectively when the moment arrives. They truly work in concert.
Perfectly put. It's a complete system for action.
Now, Charlie Munger's mental model approach, it wasn't a simplistic paint-by-numbers strategy where individual models are applied in isolation, was it?
No, definitely not. That misses the point.
The true genius of his method lay in understanding and applying how these diverse models interact, overlay, and combine to illuminate complex situations from multiple perspectives. It's about seeing the bigger picture.
Leading to more holistic and robust decisions. Munger himself acknowledged that forces emerging from different models can sometimes be conflicting, necessitating careful trade-offs. Other times they can combine powerfully in the same direction, leading to those Lollapalooza effects we discussed.
Right.
The ability to perceive and manage these interactions, to understand how different models might complement, contradict, or synergize, is really a hallmark of advanced worldly wisdom. It's seeing the interplay.
Because real-world problems are rarely simple enough to fit neatly into the confines of a single mental model. For example, you might have a psychological bias like managerial overconfidence, interacting with a market dynamic like a positive feedback loop in the stock price.
Yeah.
And the company's vulnerability might be further exacerbated by a lack of engineering redundancy in its core business model.
A perfect storm brewing from different domains.
Exactly. You really need to be able to see these complex interdependencies to understand the real risk or opportunity.
Recognizing these intricate intersections allows for a much richer, more accurate, and less error-prone analysis than any single model perspective could possibly provide. This is where the art of applying Munger's science truly manifests. His genius often involves using one model to check, refine, or validate the output or perspective offered by another, creating this more robust, cross-checked decision-making process. Let's look at how this might play out in practice.
Yeah, give us some examples.
Okay, so when considering a potential business investment, Munger would deploy this cascade of interacting models. You might start with inversion, asking, okay, what are all the ways this business could fail or this investment could go totally wrong?
Start with the negative.
Right. Next, the circle of competence model would kick in. Do I really understand this industry and this specific business well enough to accurately assess these potential failure modes and the company's ability to navigate them? If the answer was no, the analysis might just stop right there. Pass. Exactly. If it was within his circle, he would then draw upon the broader latticework of mental models, pulling insights from various disciplines. Psychology might inform an assessment of management's rationality and potential biases. Economics would provide context on market dynamics, competitive forces. Biology might offer analogies for understanding the life cycle of the company's products. Engineering principles like redundancy might be used to evaluate the robustness of its operations.
Pulling from all over.
Then the margin of safety principle would be applied. Is the purchase price offering a substantial buffer against any misjudgments or unforeseen problems? And finally, the opportunity cost model would demand a comparison. Is this investment, even if it looks attractive in isolation, the best available use of capital compared to other opportunities right now?
Wow. That multi-angled, cross-checking approach is clearly designed to minimize the blind spots inherent in relying on any single model or discipline. It's incredibly thorough. And it's not just for individual investments, right? How would Munger understand something as complex as, say, big stock market swings?
Well, Munger suggested that large-scale stock market movements are rarely caused by a single factor, but are better understood as the result of several models interacting. You've got psychological biases like loss aversion causing panic selling, and social proof fueling herd behavior major drivers.
Fear and greed cycles.
Right. Then feedback loops from systems theory can amplify these psychological effects. Falling prices trigger more selling, which further depresses prices, creating that positive feedback loop downwards. Or rising prices fuel FOMO, pushing prices higher. The concept of critical mass or tipping points from physics can explain how a trend, once it gains sufficient momentum, can become self-sustaining for a while. It's rarely just one thing. It's usually a confluence, a Lollapalooza.
Okay, let's take a concrete positive example. His highly successful investment in Costco. How did his latticework approach play out there? That seems like a business he really understood.
Oh, absolutely. First, his circle of competence clearly included a strong understanding of the retail sector, giving him confidence in evaluating Costco's business model. He knew retail. Then models related to scale advantages and autocatalysis were clearly at play. Costco's high-volume, low-cost membership fee model creates this incredibly powerful self-reinforcing system. Low prices attract more members.
Right.
Increased membership volume allows for greater purchasing power and even lower prices.
Which attracts more members.
Exactly.
Yeah.
And fosters intense customer loyalty. It's a
Yeah.
beautiful autocatalytic loop, a flywheel effect.
Okay.
And the power of incentive psychology was also evident. Costco's strategy of paying its employees relatively well compared to competitors and offering significant value to its customers aligns the incentives of key stakeholders, employees, and customers with the company's success. This contributes to operational excellence and that fierce loyalty. It all worked together beautifully.
So multiple models, all pointing in the same positive direction, reinforcing each other. That sounds like a Munger sweet spot.
Navigating the latticework challenges limitations in cultivation.
Okay, so while Charlie Munger's mental model framework offers this incredibly powerful pathway to enhanced thinking and decision-making, its application isn't without challenges, right?
No, definitely not. It requires effort and awareness.
A fundamental concept Munger himself embraced, which serves as a crucial caveat, is the idea that the map is not the territory. How does that perspective temper our enthusiasm for these models? What does it really mean in practice?
It means that mental models, by their very nature, are simplified representations or abstractions of a far more complex reality. They are not reality itself. As the statistician George Box famously put it, all models are wrong, but some are useful.
All models are wrong. I like that.
Yeah. This inherent simplification is what gives models their power. They make complexity manageable, but it is also their primary limitation. You have to remember, you're looking at a simplified picture. And this understanding necessitates the use of that broad range of models drawn from multiple disciplines, as Munger advocated. Relying on any single model or a very narrow set of models is like trying to navigate a vast and varied landscape with only one type of map, say just a topographical map, when you also need a road map and maybe a weather map. It will inevitably lead to blind spots and misinterpretations.
So the inherent simplification of models means that judgment, context, and critical thinking are always required in their application. They're not like algorithmic inputs that automatically generate correct outputs.
No, not at all. That requires the art alongside the science, as you said. The art of using mental models effectively lies in selecting the most appropriate set of models for a given situation, understanding their underlying assumptions and their limitations, and interpreting their combined insights critically. Always remembering that you are viewing an imperfect representation of a deeply complex and ever-changing reality.
And it sounds like there are several risks if these models aren't approached with a care and intellectual discipline. What are some of the main pitfalls?
Well, a common error is misapplication, applying a perfectly valid mental model to a situation where it's just inappropriate or irrelevant. This is a manifestation of Munger's man with a hammer syndrome. If your toolkit is limited, you tend to force-fit problems to the tools you have.
Seeing nails everywhere.
Exactly. Then there's oversimplification. While models are necessarily simplifications, there is a danger that they can become overly simplistic, failing to capture crucial nuances, complexities, or interdependencies. This can lead to a superficial understanding and potentially flawed decisions.
And I imagine this oversimplification can foster that Dunning-Kruger-like effect, where possessing a few models creates this illusion of comprehensive understanding.
Yes, making you think you are more knowledgeable than you truly are. It's not enough to just know the name of a bias or a model, is it?
No, it's not. It seems the very act of naming, learning, and categorizing a mental model can create an illusion of understanding or control over the phenomenon it describes. Like once you learn the term confirmation bias, you might feel you know it and are therefore immune to it.
Right. Oh, I know about confirmation bias, so I don't do that.
Yeah.
Yeah.
But truly internalizing its subtle manifestations and consistently counteracting its influence in diverse and complex real-world situations requires far more than just definitional knowledge.
Absolutely. Which brings us to another related risk. Overconfidence. Simply learning about mental models doesn't automatically guarantee better outcomes. There's a risk that initial successes, or even just the intellectual appeal of the models themselves, can breed overconfidence. This can, paradoxically, make one more susceptible to biases, leading to the dismissal of contradictory information because you know the models.
So learning the models can ironically make you more biased if you're not careful.
It's a real danger if not coupled with humility.
This leads to a significant critique I've heard, sometimes called the mental model fallacy. The belief that merely reading descriptions of mental models, particularly those in simplified list formats you see online, is a sufficient path to self-improvement or success like Munger achieved. How would Munger himself address this gap between explicit knowledge and tacit skill?
That's a crucial distinction. The core of this argument lies in the difference between explicit knowledge and tacit knowledge. Explicit knowledge is stuff that can be readily codified, written down, transmitted like the definition of inversion or the formula for compound interest.
Stuff you can find in a book.
Right. However, many of the most valuable mental models, particularly those that account for expert performance, are deeply rooted in tacit knowledge. This is experiential, intuitive, contextual. It's the feel for execution, the nuanced judgment learned through years and years of practice, trial, error, and reflection. This type of knowledge is notoriously difficult, if not impossible, to fully codify or communicate through words alone.
It's like attempting to learn how to ride a bicycle or perform complex surgery solely by reading a book. You can read all the instructions, the theory.
But you still need to get on the bike and fall a few times or get into the operating room and practice under supervision.
Exactly.
So while Munger and Buffett could articulate many of the mental models they use, their lifetime of experience imbues those models with a depth of understanding and an intuitive grasp of their application that cannot be easily transferred just by reading their words. Knowing a model in theory is profoundly different from knowing it in practice.
The knowing-doing gap.
Precisely. True mastery of Munger's approach requires moving far beyond intellectual consumption to deep experiential learning, that diligent arraying of experience onto the lattice work, and the internalized application of these principles across a multitude of real-world situations. Munger himself underscored the importance of practice. If you don't practice, you lose it. The popularization of mental models as easily digestible lists can be misleading if this crucial role of sustained practice and deep experience is downplayed.
Okay, so even for those committed to deep learning and practice, the practical application of Munger's latticework approach presents several challenges for you, the listener. What are some of the biggest hurdles people face?
Well, first, there's the difficulty in cultivating a truly multidisciplinary mindset. Let's be honest, not all individuals possess the time, the resources, the intellectual inclination, or maybe the educational background to delve deeply into a wide array of diverse disciplines like physics, biology, psychology, history.
Life gets in the way. Specialization is often rewarded.
Exactly. The demands of modern professional life often favor specialization. Attempting to cover too many fields without sufficient depth can lead to a superficial, dilettante understanding of many models, which isn't very useful.
Then there's the information overload and synthesis challenge, right? The sheer volume of information out there, the number of potential models Munger suggested, 80, 90 key ones, it can be overwhelming.
Very overwhelming. And synthesizing insights from disparate disciplines into a coherent and actionable framework is a complex cognitive task in itself. Especially in fast-paced environments, deciding which models or information are most relevant to a specific problem can itself be a difficult judgment call.
And finally, ensuring interconnectedness. A key challenge, as Munger highlighted, is making sure that mental models are considered in relation to each other, understanding their interplay and potential combinations rather than just applying them as isolated tools in a checklist fashion.
Building and navigating these interconnections effectively requires a high level of cognitive integration. It takes time and effort to see how, say, a concept from thermodynamics relates to a business strategy.
So the very richness and breadth of the latticework approach, which are the sources of its power, can also act as barriers. It demands a substantial and ongoing investment in learning, thinking, and synthesis.
It really does. It's not a quick fix.
Which brings us full circle, really, to the personal attributes Munger highlighted as indispensable: continuous learning, intellectual humility, and objectivity. These seem non-negotiable.
They're absolutely non-negotiable. These three virtues are not merely desirable personality traits for someone aspiring to Munger's level of wisdom. They are functional prerequisites for his entire method.
Functional prerequisites. Okay.
First, continuous learning. Munger was a voracious reader and a lifelong learner. Remember his quote, "In my whole life, I have known no wise people who didn't read all the time. None. Zero." He believed one should spend each day trying to be a little wiser than you were when you woke up. This relentless pursuit of knowledge is the primary mechanism by which new models are acquired and existing ones are refined. You have to feed the lattice work.
Got it. Keep learning. Second, intellectual humility. This involves accurately recognizing the boundaries of your circle of competence and acknowledging what you do not know. It is the willingness to admit error and, crucially, to destroy your own best-loved ideas if they are found wanting. Without intellectual humility, you risk overconfidence and a failure to learn from mistakes or new information. Your ego gets in the way.
Know your limits. Be willing to be wrong.
And third, objectivity and rationality. Munger stressed the importance of seeking truth and recognizing reality, even when it is uncomfortable or contradicts your desires or ideology. This requires actively seeking disconfirming evidence to counteract confirmation bias and avoiding the allure of extreme ideologies that can cloud judgment. His oft-repeated warning, "Above all, never fool yourself and remember that you are the easiest person to fool," underscores the constant vigilance required to maintain objectivity.
You are the easiest person to fool. Powerful.
It is. So these virtues, continuous learning, intellectual humility, and objectivity, they form the bedrock. Without them, the lattice work of models cannot be built or expanded effectively, and their application risks being distorted by all those cognitive biases we talked about, rendering the models ineffective or even counterproductive. Outro. Wow. Okay, what a deep dive that was. We've journeyed through Charlie Munger's intellectual architecture, exploring those foundational thinking tools like inversion and margin of safety.
The core toolkit.
Diving into the intricacies of human psychology and bias, which was fascinating.
And humbling.
Yeah, very humbling. And sampling the wisdom from diverse disciplines like mathematics, biology, engineering, physics, we've seen how these individual insights coalesce into his powerful, interconnected lattice work of mental models.
And if we connect this to the bigger picture, Munger's enduring legacy is really a call for a more conscious, deliberate, and rigorous approach to thinking itself. It's about metacognition, that capacity to reflect on and improve your own thinking processes.
Thinking about thinking again.
Exactly. His framework offers timeless relevance for enhancing rationality, decision-making, and just fostering a spirit of lifelong learning in an increasingly complex world.
And the most inspiring part for you, the listener, his assertion that even people who aren't geniuses can outthink the rest of mankind if they develop certain thinking habits.
It's empowering, isn't it?
It really is. It suggests as a learnable method for better thinking, not some exclusive domain of innate genius, but an achievable outcome of sustained effort, intellectual discipline, and a commitment to mastering the big ideas that govern reality.
The true takeaway for you is that this isn't just about memorizing elective models you find online, but embarking on a continuous journey of intellectual curiosity, refinement, and practice. It demands effort, humility, and constant engagement with the world around you, arraying your experience on the lattice work.
So as you go about your week, we want to leave you with maybe a provocative thought. Munger emphasized that the true power of these models comes from their synergy, their ability to interact and combine.
The Lollapalooza effects, positive and negative.
Right. How many times in your own life have you looked at a problem with just one hammer when a whole toolkit was needed? What one situation this week could you re-examine by asking, what's the opposite of what I should do? Inversion. Or what are the second-order effects of this decision?
Just pick one model and try it out.
Yeah. Think about how you can consciously begin to array your experiences on your own growing lattice work. Start building it thread by thread.
It's a lifelong project.
It certainly is. Keep those intellectual muscles flexing, and remember to join us next time for another deep dive into the ideas that shape our world.
All analysis is based on publicly available sources and may be subject to revisions or differing interpretations. But the content is for educational purposes only and does not constitute investment advice. Conduct your own due diligence before making investment decisions. If you want to listen to our full deep dive about this topic, subscribe to us on Apple and Spotify podcast channel, Deep Value Investing. Don't forget to take the book list of value investing from the episode description. You can also download our latest market bubble monitoring app, Buffett Indicator, from the Apple App Store to receive daily updates on the Buffett Indicator.